Asian stock markets fell and oil prices edged higher on Tuesday as investors reassessed hopes for a diplomatic breakthrough between the United States and Iran. Japan's Nikkei and Hong Kong's Hang Seng were both down about 0.8% in early trading. South Korea's Kospi fell 1.2%, extending the volatility that has accompanied strong demand for memory chips used in artificial intelligence. Oil prices moved in the opposite direction. Brent crude rose 0.9% to around $84.50 a barrel, recovering some of Monday's losses. The moves followed a dramatic session on Wall Street, where stocks surged while oil prices fell about 5%. The S&P 500 gained 1.5% and ended the day just below its all-time closing high. The technology-heavy Nasdaq composite jumped 2.1%, while the Dow Jones Industrial Average rose 1.3% to set a new record. Large US technology companies led the rally. Meta Platforms gained 6%, while Microsoft, Amazon, and Google's parent company Alphabet rose by between 4.4 and 4.9%. Nvidia climbed 2.9%, and electric vehicle maker Tesla gained 3.5%. Apple was the only member of the so-called Magnificent Seven that did not record a substantial increase. The rally continued modestly in after-hours trading, with futures linked to the S&P 500 moving higher. But some analysts questioned whether the scale of the gains was justified. Melissa Brown of SimCorp told Al Jazeera that she was surprised by the strength of the rally because market sentiment remained relatively negative and there was no clear fundamental reason behind it. The main driver was renewed hope that Washington and Tehran might avoid another round of military escalation. US President Donald Trump said talks with Iran were underway and that he wanted to give Tehran one final chance to reach an agreement before the United States resumed its attack. A day earlier, Trump said he had cancelled plans for what he described as the largest attack since the Second World War after speaking with Gulf leaders. Those comments reduced fears of an immediate disruption to oil supplies, pushing crude prices sharply lower and lifting US stocks. But Iran disputes Washington's account. Foreign Ministry spokesman Ismail Baghai said Tehran was not negotiating directly with the United States and had no meetings with American officials planned. He said Iran was instead holding talks with Oman about allowing ships to pass through the Strait of Hormuz. The waterway carried about a fifth of the world's traded oil and gas before the war, making its reopening crucial for energy markets. Baghai said wider disagreements between Iran and the US would have to be addressed at a later stage. The conflicting statements help explain Tuesday's more cautious trading. Markets are pricing in the possibility of a deal, but no agreement has been announced and the Strait of Hormuz has not fully reopened. For investors, that leaves two sharply different scenarios. A credible agreement could bring oil prices down further and support global stocks. A collapse in diplomacy, followed by renewed strikes or attacks on shipping, could rapidly reverse Monday's rally.